Hey everybody, it's Alex Meller at Catneon here. You might have seen in the news that OpenAI's Stargate collaboration with SoftBank, among others, is foundering because of concerns about trade, macroeconomic consequences, and future demand for AI data centers. And then also, is OpenAI really a legally sane thing to invest in? There's a whole lot of interesting things to be said here, but a really interesting digression is to point out that SoftBank is a Japanese company and a great place to examine the role of foreign investment in the American technology scene. A whole lot of public debates about economic things are framed in advance by what you might call accounting principles. If I manufacture some shoes and I sell them to someone in Japan, that goes into the trade surplus or deficit. If I invent a new cryptocurrency and I sell it to someone in Japan, well, the way the world has been heading is it thinks about cryptocurrency as a financial asset. That does not go into the trade deficit or surplus. And so it's always really like, how can we be running these trade deficits forever? The answer is, of course, ownership of assets is going abroad, and this could be in the form of duffel bags of dollar bills, or it could be in the form of ownership of businesses. A lot of your favorite celebrated startups are really entities that put money in the bank for a lot of their history by selling equity. To the extent they sell equity, that once again is something that is being sold abroad and bringing money to the United States, but is not influencing that trade surplus or trade deficit. SoftBank is an extremely interesting and illustrative case, and I'm going to get to WeWork in a minute. SoftBank is a Japanese company. As you may or may not know, they created a very large and very visible and celebrated venture capital fund called the Vision Fund. And famously, Masayoshi Son raised a lot of that money for the Vision Fund from Saudi Arabia, which of course has a whole lot of dollars lying around because of all the oil they sold us. So the Saudis give this money to this Japanese company to put in this fund. That fund invests a lot of money in WeWork. So what happens to all that money? Ultimately, it becomes the salaries of tech workers who then consume a lot of things, many of which are imported. And even in this blitzscaler venture-backed model, WeWork was probably on the weird arc that it was on, ultimately unsuccessful, because it was essentially buying office space and reselling it as a loss. So if you're someone that enjoyed being a WeWork customer, you are really indirectly getting some of your nice office space with a DJ subsidized, if you work the money all the way backward, by the Saudis, and they have that money to begin that cycle because they sold Americans a lot of oil. And ironically, a lot of that money that passed through that journey, got paid out to WeWork employees, etc., was then used to buy gasoline for these employees driving around town. This is actually a pretty nice deal in that, in the end, all that money that went abroad all came back to become income and similar fueling consumption for Americans. The Saudis indirectly did get to own a lot of WeWork, and I'm empathetic. There's also at times cycles of fear. Maybe if you followed the golf world recently, cycles of fear about people abroad owning a lot of businesses and property and getting a lot of control over American life. And I expect that. But just to examine this one example, well, in the end, the Saudis got basically nothing out of their not great investment in WeWork. SoftBank got egg on its face. Vision Fund got egg on its face from its investment in WeWork. Who really won here? American tech workers. And of course, this is not necessarily broadly shared prosperity. There's a lot of things that are a little Byzantine here that someone or other might or might not like, but it wasn't all bad for American workers, for sure. And more than I want to argue that you should like these flows of capital or that you should feel better about a trade deficit because of these flows of capital, I would just point out that there's an accounting thing in the background. In the United States, we're actually very good at inventing new assets to sell people. And it's generated a lot of prosperity in the United States that we're very good for generating new assets to sell to people. We have this accounting principle that we do not recognize in our political discourse that says that when you make up a new financial asset and to sell it to somebody, that's not trade. We don't count that in the trade surplus or deficit. And there are good reasons it's like that, but the reality in a lot of corners of business and entrepreneurship is that you're trying to put money in the bank towards some strategic end. Selling a stock or a bond to someone is a totally viable way to do it. And it really matters a lot in terms of success of businesses and how that feeds through to just everyday life and its economic qualities. It matters a whole lot that you're able to sell these assets, and that's part of the picture. And it's not at all about goods alone, as this accounting principle would say.